Warren Buffett is the world's most famous investor with a fortune that in 2018 exceeded $84 billion. In fact, he is the third richest person on the entire planet, but it was a position he earned with decades of hard work. Warren Buffett was born in the US in the mid-1930s, shortly after the Great Depression hit the country. His father, Howard Buffett, a stockbroker who was able to pull them through the crisis, was a major influence on Warren. A few years later, his father's career took off and he won a seat in the US Congress, forcing the family to move to Washington, D.C., where Warren became lonely and began to read his father's investment books. Even at this young age, Warren became obsessed with becoming rich, telling his friends that if he wasn't a millionaire by 30 he would jump off the tallest building he could find. By the age of 11, Warren was already investing in the stock market. One of the books that inspired Warren the most was 1,000 Ways to Make $1,000, which encouraged him to go into business and work selling coke and delivering newspapers. At the age of 14, Warren was already filing taxes and would deduct the expenses of the bicycle and watch he used to deliver newspapers. With all that money, Warren would start a pinball machine business that he would distribute around his neighborhood and later sell for about $16,000 today. All this success meant that, after high school, Warren wanted to focus on his business. But his father forced him to go to college. Buffett graduated with a degree in business administration and management, having by then accumulated more than $100,000 today. He then applied for a master's degree at Columbia University, where he would be taught by Benjamin Graham, who would change the young man's life forever. Graham is the author of the book The Intelligent Investor, one of the most famous investment guides of all time. Graham's approach was to find normal companies with cheaply priced stocks that were below their real value, which due to a short-term market mistake had been overlooked. The key to this method was to invest in the company during those times. One of the first companies in which Warren applied this method was the Sanborn Map Company, a mapping company where, in just 2 years, Buffett had earned 45% profit with almost no risk. Following the same investment philosophy, by the time he reached the age of 32 he had become a millionaire. However, the real investor boom was yet to come. As it turns out, in 1962 Warren came across a textile company that had been in trouble for some time called Berkshire Hathaway. Its shares were then selling for $7, but its assets were worth at least $11. The company's CEO, Seabury Stanton, wanted to buy back the company and liquidate it to make a profit on its assets. Warren, knowing Stanton's intentions, bought a large amount of stock and waited for the CEO to call him to buy it back. A couple of years later the two men agreed on a price of $11.50 per share, but when the day of the exchange arrived, the offer was only $11.37. As you might imagine, Buffett was not amused that Stanton tried to cheat him, so he bought the entire company and fired him. However, now Warren had a loss-making company, but instead of letting it go bankrupt, Warren started investing in other stocks through the company, which he would later use to merge his firms and give rise to the Berkshire Hathaway we know today. But due to this bad experience and the influence that Charlie Munger had on him, Buffett decided to change his philosophy, and now he was going to invest in incredible companies with normal prices as he did with American Express, Coca-Cola Company or IBM. It was a success to invest in extraordinary companies, but what really allowed Warren Buffett to make his great fortune was to start buying insurance companies. The reason is that insurance companies are like banks, where people pay a fee on a regular basis. This gives the insurers a large amount of liquid money to do their operations, which they also only have to pay back, in part if something very bad happens. And the key reason Warren was buying these companies is that their stock price didn't take into account the amount of cash they had. Suddenly, Warren had access to all this money, which, as you would imagine, he invested wisely, and with it becoming the billionaire he is today. Since then, Buffett has continued to grow his fortune and expand his company's portfolio.